afternoon from Los Angeles and welcome to Stock Market Today. On today's show, we're going to be taking a look at the charts of Square, RingCentral, and Netflix hanging in there, but we begin with a look at the major indexes. It's Alyssa Quorum here with Ken Shreve. And Ken, just when we thought in the middle of the session we were going to get a little bit of relief from the selling, it just worsened, closing at the lows of the day. The Nasdaq finishing down 4.6% for the session. The S&P down about 4.3%. Same with the Dow. So a very, very ugly session of selling.
Yeah, I mean, we opened very weakly this morning. This was after the Centers for Disease Control reported the first coronavirus case in California of unknown origin, so they couldn't quite track where it came from. That fueled fears of a possible spread in California. And then in the afternoon, California Governor Gavin Newsom said that the state is investigating thousands of potential coronavirus cases, and that resulted in another leg down for the major stock indexes. Here we have a look at the Nasdaq's chart. You can see a recent break of the 50-day moving average. It's now more than 12% off its high, looks poised for a test of its 200-day moving average. That's a long-term support level. S&P 500 is below its 200-day line. The Dow, Russell 2000 are below their 200 days line. So the Nasdaq is really the last index left standing here, but some pretty serious selling as we finish off the day.
Yeah, and that chart is slightly delayed that you'll see there. So closing at the lows of the day again. So even worse losses. The Nasdaq now more than 12% off of its highs from just very recently. So the rapid decline here is something to be concerned about for investors. We don't know when the selling will stop.
Yeah, and listen, the Nasdaq last week, Thursday, Friday, Monday, and Tuesday, 4 straight distribution days for the Nasdaq. So, this market pullback started with signs of institutional selling in the market. Again, it started last Thursday, and we had 4 straight distribution days for the Nasdaq Composite through Tuesday of this week. So the selling has picked up the pace. We are in a market correction. It's not the time to be buying stocks. It is the time to be looking for stocks holding up relatively well. So we'll talk about a few of those, but it's a very dangerous market right now. And we should also say that the selling in the stock market has really coincided with a tremendous plunge in bond yields. So money has been flowing into the bond market. The 10-year Treasury yield, is around 1.3%. It's been a sharp drop since the beginning of the year. So plunging bond yields, the bond market's way of saying it's worried about a pretty severe economic slowdown.
Yeah, that's definitely right. Now let's take a look at a few individual names on our radar, starting off with Square, which issued its quarterly earnings report. Now we did have earnings growth of 64%, revenue growth of 40%, so strong double-digit growth on both the top and bottom lines, continuing a strong track record here for Square, but it was only able to close the day, and then again, this is a weekly chart, the day up about 3.8% after climbing well above that level early, so fading by the end of the day, just even with the strong results, can't hold up in this weak market.
Yeah, I mean, it really got pulled down by the broad market late. The stock was up more than 11% at one point, and it was a really outstanding earnings report. It was another quarter of strong bottom line and top line growth. But the real story, we had a lot of coverage on this earlier at investors.com, but the company's new Cash app, which is basically a peer-to-peer payments app similar to Venmo, it now has 24 million active users. That's up 60% from a year ago, so still a very compelling growth story at Square. The stock did give back a lot of its gains, but still rose 3 to 4% on the day, and credit to the company for a really outstanding earnings report.
Yeah, very compelling growth story, and that relative strength line, it is off of all-time highs, but nice to see it still holding above short-term levels.
Yeah, we've been paying a lot of attention to stocks with bullish RS lines. Square is definitely good. But stocks with bullish RS lines near highs in this very weak market are the types of stocks that you want to pay attention to. So
yeah. And one such stock is Ring Central. So let's pivot our attention to that name out of the enterprise software group. We have that gaining just fractionally today, but heavy volume here. And as Ken mentioned, the strength here with this RS line, very evident. Another weekly chart here. So holding up quite nicely. It's hanging on above its 21-day exponential moving average even.
Yeah, I mean, there aren't too many stock charts that look like Ring Central's right now. It continues to show strength. It really has turned into a coronavirus play because this is a company that provides cloud-based communications and collaboration services for businesses. So, businesses that don't want to, be in crowds with meetings with a lot of people, they can just conduct their business over Ring Central software. So it's just, a lot of damage in the enterprise software group lately amid the tremendous selling in the broad market, but Ring Central still holding its own.
Yes, and Netflix and other at-home entertainment type stocks also seen as beneficiaries as of now. So Netflix stock is holding up. Another weekly chart we're going to be taking a look at, down about 2.2% for the week, but still above its 10-week moving average. That's that red line there, Ken.
Yeah, I mean, Netflix was a stock that had been really acting well all day. It showed a nice gain. It did reverse lower by the close, but you can see on the daily chart here, it did it did close off its highs, but still a stock that any stock that's holding above its 50-day moving average at this point is a strong stock in the market. So Netflix has a lot going for it. U.S. subscriber growth has slowed down quite a bit, but they still have a pretty good international growth story. And again, this is there's a lot of stocks that are benefiting from the spread of this coronavirus. Ring Central we just talked about, Netflix, and Zoom Video, which reports earnings next week. That's been a big performer as well.
Yeah, that's right. Make sure to check out Ken's earnings preview column for details on that. And of course, this is an evolving situation. Headlines, of course, sparking a lot of the extreme moves that we've been seeing. So we will continue to watch the latest as well as provide detailed analysis of the market and portfolio strategies given the current conditions.
Yeah, I mean, on IBD Live this morning, we did talk about some signs of an oversold market, some metrics that measure a market being oversold or undersold. And I mean, today's action showed that oversold markets can stay oversold. So wouldn't be surprised to see a bounce at some point. There was a point today where indexes rallied sharply off their lows. The Dow was down 950 points, and it rallied back all the way near its session high, but then that another wave of selling in the afternoon. So it's an oversold market, but oversold markets can stay that way for a little while. So
yes, we'll definitely have to see. And we also have our latest weekly podcast episode out for you now. That's the Investing with IBD podcast, hosted by our very own Arusha Pira. So make sure you check out that for his latest insights as well as the insights of our special guests. You can go to investors.com/podcast to listen to it now.
Yeah, and Mike Webster is a big player on IBD Live. Mike Webster is Arusha's guest on this podcast. It's going to be outstanding.
Yes.
Sorry to interrupt.
No, I'm glad you did. I was going to kind of, make it sneaky who was the special guest. Click to find out. But anyway, Mike Webster, definitely want to check out his insights. And we also have a webinar coming up next March 10th at 11:30 a.m. Pacific. Nailed it, failed it. Two pros sharing their trading hits and misses. That'll be with Arusha and our very own Scott St. Clair. So make sure you check that out. All right, everyone. Thanks for joining us. We'll see you right back here tomorrow.